Hello, everybody. Welcome to Talk About Houses. I'm Todd.
I'm Juana.
Okay, we're going to talk about Goldman Sachs 4-year housing estimate.
Yes.
There's some general information. They did some analysis. We read the article, thought it would suit you guys. We want to congratulate all of you who subscribed and got us to 10,000. We're not there, but we're just within a couple. So it's going to happen sometime today. We're just a couple short right now.
Right.
So this is like on election night when they call the election, because they've got like that margin of victory, and then maybe the next day they don't. But I think we're gonna, by the end of today, we'll certainly have 10,000 subscribers. Yes. It's just a big deal for us. So
right. So we thank you for your support. We really appreciate it. If you haven't subscribed, please subscribe. You might be the 10,000 one, so that's pretty exciting. We appreciate everybody subscribing, sharing, hitting the notification bell, and watching the videos. So here we go.
Here we go. Here's the headline: From home sales to prices. Here's what Goldman Sachs sees for the housing market in the next 4 years.
Yes.
They got their crystal ball out.
Well, that, and they watch our videos.
They watch our videos. They literally, you're going to find this funny as we read through some of the stuff. Yes. I think they didn't quote us, but they quoted us.
That's right.
We didn't get credit for it. Okay, here's the first quote, Juana. Housing starts and home prices will tick higher, while existing home sales will remain flat in the bank's view. We'll talk about a couple of these real quick. Housing starts. That's a no-brainer because housing starts are literally super low right now, right?
Right. So housing starts, well, they could have remained the same or gone down, but we think that they're right, that they will go up higher because, as we know, interest rates have definitely started to go down. So because the cost of money is getting more affordable for builders, they are pulling more permits and they are going to build more homes. Like I said before, builders are not going to build a whole lot of homes because they want to build just the right amount so they can maximize their profit. They also have other constraints such as land, labor, and materials.
Okay. Home prices, they're estimating home prices will tick higher. We're going to do a video. We're going to get all the companies, but there were 8 big companies that estimated home prices, from Zillow to CoreLogic and all these. And it was 6 of them were higher and 2 were lower. But the 2 lower was like barely, like less than 1%. And I think the average was like 3 or 4% higher. But we'll do a whole video on that. That's kind of a no-brainer. I think it'll be a little higher. There's this sort of running theory that because high interest rates didn't crash housing, it'll be low interest rates. Because see, what happened is with low interest rates, you got to look at it very carefully. All the people will flood back in the sellers will flood back in the market to finally sell. But then there won't be any buyers because home prices will be too expensive, even though interest rates will be, super low. Doesn't make any sense.
Right. And the interest rates are not going to be super low. They're just going to be lower. Okay.
Goldman forecasts the Fed to achieve a soft landing and a no recession scenario in 2024. It would actually be better for housing to have a nice little recession. Why is that?
Well, because in recessions, there are more opportunities. But, I agree with them. I think, the whole thing about the recession, it's been kind of like the little boy who cried wolf, right? It's been that way all the way along. So I don't think that we're going to have a recession in 2024. And if we do, it's going to be kind of a head fake one. I think 2025 is a different matter. Because that's post-election, that's a lot of other things are going to be at play. So that'll be interesting to watch in 2025. But I think 2024 is going to be a pretty chill year as far as that goes.
I predict if we actually have a recession next year, it gets waved off. Oh, yeah, it was a technical recession, but not a real one.
Which is what I meant by head fake. Yes.
Okay. All right. Here's the next one. Goldman Sachs expects the frozen housing market, we did a video on that,
Yes.
to thaw just slightly over the next 4 years, according to an outlook from a team of strategists led by Chief Economist Jan Hatzius. Then we've got the numbers. We're going to go through the numbers on this. But basically, they're saying the housing market's frozen because people aren't selling.
Right, which is true. I mean, sellers have been kind of hanging out and waiting for things to change. So it's kind of a chicken and the egg, right? The sellers don't want to sell because there's nothing to buy. And so long as the sellers don't want to sell, there won't be anything to buy.
Which is why I think the argument that if the interest rates drop, people would list their houses, but there would be no one to buy. Well, if they're listing their house, they're buying a house too.
Right.
So they cancel out. The other thing to consider on this is that, in the olden days, people would come to us and say, hey, I want to list my house. We'd say, that's great. And they say, yeah, I got this like 9% interest rate. No problem. It's going to go away when you sell the house. They go, yeah, but now what I'm going to do is I'm going to sell this one, go buy a bigger house. And I'm going to get a 7.2% interest rate. And they're like, wow, so they have no problem selling the house. They wouldn't want to keep it because it's 9% interest rate. Now imagine this, you're selling the same house and you have a 2.9% interest rate. And you're like, hey, I'm not selling this house. I just want to buy the next one because this now is a great investment. I don't want to get rid of this because my mortgage payment is $1,100 and I can get $2,500 a month in rent, right?
Right.
And that's sort of the reason that does not get solved by high or low interest rates because remember, those people are locked in for 30 years.
Right.
This is a multi-decade problem, as you're going to see with these numbers that come out. Okay, now this is what Goldman Sachs is saying. Now remember, this is the number of homes that they expect for new homes to come out over the next 4 years. Okay, new home sales. Okay, Goldman sees a figure at 680 in 2024.
And that's probably pretty legitimate because, like I said, builders have figured out that there's not enough inventory and there is room in the marketplace for them to build a little more, but not a lot more for them to continue to maximize their profits.
Okay. And that's actually for this year. So then they're saying 723,000 and then 771 and then 778 and then 858 2027. But Juana, none of these household formations will be over 2 million per year for each of these years.
Right.
And we know that we have to build at least one because there's other things that get, like apartments get built and things like that, right? So we have to build at least one new home for every 2 household formations. They're literally admitting that they're going to build like 40%.
Right.
Instead of 50%.
And this is not keeping in mind the number of homes that simply disappear, right? These are due to fire, to obsolescence, to condemnation, to eminent domain, whatever. But there are, obviously a lot of homes in the U.S. that disappear because they're just old and they're beyond saving, so to speak. I think the numbers that I saw were somewhere pretty close to 250,000 homes a year.
Okay. Now we'll talk about existing home sales. Meanwhile, Goldman's preliminary estimate puts 4 million for this year, 4.1 million, which is sort of the estimate. They're saying it'll dip to 3.8 million next year. So it'll be less. There'll be less home sales next year. This is resale homes. And then in 2025, 4.2, and then 4.3, and then 5. What I thought was funny was it's 5.001 million for each of the 2 years. Juana, neither of these two for total homes sold is above the normal long-term trend. They're saying home sales all the way out to literally 2027 are going to be less than the normal.
Right. So what that lets you know is that prices are probably going to remain stable in some areas and probably increase maybe substantially in other areas because there is more demand than there is supply. Look, okay. if we're not doing enough transactions, that means that there are not enough homes coming to market. It doesn't mean that there aren't enough buyers. We know that from this year, where we have very low number of transactions and more buyers chasing an insufficient supply.
Here's the next one. This will wrap it all up for the numbers. The last figure, which was the 5 million, by 2027, the Wall Street firm doesn't expect existing home sales to reach either the pre-pandemic level of 5.34 million or the 2021 boom of 6.12 million, as Resi Club pointed out in a note Tuesday. Now, keep this in mind. They're predicting 3.8 to 5, and the pre-pandemic it was 5.34. So they're literally saying like anywhere from 1.5 million to 300,000 homes less per year being transacted. To me, that means home prices, that is a factor for pushing home prices up. You're going to have all these people demographically, millennials, and Gen Zers, trying to get in the housing market. You have pent up cash sitting around. All these people are going to try to buy houses. and people aren't going to be selling. And this, to me, means that in most markets, home prices will probably be going up. I mean, don't you see that?
I do. And then, here's the interesting thing. I think the rumblings in Congress regarding interfering with property rights, when they were talking about limiting how many homes different funds could own and that sort of thing, I think that may have a chilling effect for foreign investors, in the sense that maybe some of them who thought, well, I'll get in the U.S. market at a later point, maybe will enter the U.S. market sooner so they can get grandfathered in case there are restrictions.
Well, the proposed restrictions were you had to own 75 houses.
Right.
And first of all, it was literally 3 or 4 people total they couldn't even get co-sponsors. They literally only got a couple people. There's a 0% chance it'll pass the House because the House doesn't want to deal with it, and it came from the minority, and zero things the minority has proposed have actually been adopted.
Right, but things like that tend to be embers, and they tend to be embers that are that stick around.
Right.
And so that is a concern going forward. And I know that there are people all over the world who do watch what goes on in our housing market and in our economy, and things like that might prompt action.
Okay. Let's say, worst case scenario,
Yes.
that in 2024, every single corporate seller put the houses on the market. There's about, ready for this, 700,000. That's all of them. BlackRock, Invitation Homes, they own 700,000 houses in the U.S. There's going to be 3.8 million. So this is going to take that up to 4.5 million, which is still less than 5.3 million. So even if they dumped every single one of these houses in the market next year, it's still not going to be the normal number. I think people just want to think in general terms. This is like the foreclosures. But Todd, foreclosures are up 20%. Well, yeah, that's because there were 10 foreclosures last year and there's 12 this year. So it's up 20%. But, foreclosures should be literally 10 times higher than they are now, and they're not. The current trend of foreclosures is it's going to take 20 years to get back to the normal level of foreclosures at the current rate of increase of foreclosures. So this idea that the institutional sellers, you could see this 1.5 million home per year deficit is not going to be fixed by 700,000. And there's no guarantee they would just sell, they would dump them in the market. What they would probably do is split them into blocks of 75 and then sell them off to other shell companies and different corporate entities. And they would say, look, this LLC owns 75 and this owns 75, so we're under the limit. But they're not just kind of fire sell their stuff.
No, they're not. And, look, even if they did, first of all, they are across the country, so it wouldn't be that dramatic. And then what does that really mean? Well, it means that there would be opportunities for buyers to pick those up because we are in an environment where we are starved of inventory. So providing that, they're not all in one market and they're not all in one, at one shot, it doesn't really move the needle for the market.
And also the proposed legislation was they have 10 years to sell them before they start paying the penalties. So they don't pay the penalties for a decade. They have 10 years to sell them. They could sell 70,000 a year. You wouldn't even notice. Like if I told you to drive around your neighborhood or your city and find all of the corporate owned homes that are currently for sale, you wouldn't be able to find them. I thought their predictions were very benign and very sort of, in a way it's pessimistic because, we need to sell 5.4 million homes a year, and they're predicting between 3.8 and 5, which means less sales, higher home prices.
And it's just the way it is because, like we said before, there are so many people out there that have locked in these wonderful interest rates and they're not going to let go of them, and I don't blame them. I think that the fact that Goldman Sachs is sort of on the same page as we are, I think that's kind of interesting. We have seldom been on the same page with a lot of these very well-researched institutions. So I don't know if this means that we're right or that we're wrong.
Goldman Sachs probably has a massive team of analysts that they spend millions of dollars a year. and then they have one person who just watches our videos, and then they write the report.
That must be it. And if you're that one person, then make
Subscribe.
sure you subscribe and hit the notification bell so you get the next video.
Yes.
So I hope you had some fun with the video. It was interesting. Remember to like the video, subscribe, hit the notification bell, share the video, and we thank you for watching and bringing us to 10,000 viewers. Bye.
Bye.